Good morning, afternoon, and evening traders from around the world. I hope you all had a fantastic week so far in week 5, and you're ready to rock and roll into week 6. So first things first, we need to take a look at what's going on this week, and that's going to be news, events, holidays, anything that could potentially cause a kink in the plans. And well, as we can see from the news calendar and the holiday calendar, there's not really a whole lot. Monday, Tuesday, nothing. No medium, no large news announcements. In fact, the only day this week that has any news is, any news of substance for now, is February 10th. And that is 8:30 CPI, that's a medium news announcement. 10:30 crude oil inventory is another medium, but sometimes large news announcement. And then 2 p.m. with Fed Chair Powell speaking. And then Thursday has 8:30 unemployment claims. That's it. So from the weekly perspective, we really don't have a whole lot of news. And if we look forward on the weekly calendar for holidays, we can see that Monday, the 15th, is President's Day. So there's going to be a complete, distinct lack of news this week, and we're going into an extended, longer weekend. Chances are we're probably going to see a little bit of an early in, early out kind of week ahead of us, or at least that's usually the case. But with all the news kind of stacking up on Wednesday and nothing else, maybe we can get some surprise news or something to kick things off. But as of right now, we're kind of planning on a little bit of a slow week ahead of us. But with the fundamentals out of the way, now we can dig into some charts for week 6. That's going to be for 2/7 all the way to 2/13. First up to the list is going to be the NASDAQ, and we've got some pretty good continuation to the upside. It was a phenomenal bounce off of that nice L2 pullback from, when did they finally make it down there? That was on the 29th, and then just reverse straight out of there all the way back up to the highs. Once the market hit the highs again, though, we are definitely seeing a bit of a struggle bus. We're not going up through these highs very easily, and even if we do, we've got a lot of areas of resistance above. We've got the previous major swing that's currently holding the market down. We have a 3-press wedge top, which is coming above the highs, and then we also have the channel highs a little bit above that. So the NASDAQ is very, very high up here. It's super lofty. And to make matters worse for buyers, at least in this scenario, there's not been much of a pullback aside from that one quick dip. Now, to the buyer's benefit, this quick dip down could be a powerful indication that there were some sellers that got stuck earlier, understandably, and utilize that as a chance to get out of break even. If we look at volume, we'll usually see volume reflected down here in some way, shape, or form, and we really didn't get that. So with a little tiny bit of volume there, this more so looks like it was just a big rejection off of the lows that probably got gobbled up by a market if touched order, an MIT. So with that bounce and rip to the upside, buyers are still obviously aggressive. Sellers really haven't shown a chance to get out of break even, other than maybe that little drive lower there. But realistically, it's back to the highs. We haven't made it to the top of that resistance yet. It's got a little ways to go, which would suggest that there's a bit more upside for the NASDAQ going into the week ahead. Over on the S&P, it's a very similar situation with a spike in channel and a big dip all the way down. In this case, the dip for the S&P was into the 3650s before rallying all the way back up to the highs. The S&P has broken above the high, key difference when compared to the NASDAQ. But it's running out of space. There's not a whole lot of room until we run into the top of the channel, and it's the same problems that we were talking about in the NASDAQ. It's really strong. It looks like buyers want to just keep hammering away at it, but there's just so much resistance above the market, it's going to have a tough time. At least the first few attempts. Unless it can really hit the gas pedal and break through it the first time around, more likely it'll begin transitioning into a range. Buyers want to buy cheap. They don't want to buy way up here, and, well, this obviously is not cheap. And we're starting to get towards the top of the channel. This is more likely where buyers will start turning into sellers, and new sellers will start coming in looking for a high sooner than later. Realistically, where we are at the moment, it's tough to want to be a buyer, obviously. I'd rather buy a dip. And because of the way that the market's moving, we are going back and forth pretty consistently. But the big thing that stands out is it keeps kind of hitting its head ahead of that high until it finally confirmed the high up here and then gave us the channel. And usually that's suggestive of some type of midline support or resistance, which is fairly obvious cutting right through there. So if it does pull back, if we get a snap little pullback, we might be able to utilize a little bit of a dip into the 3800s as a supportive bounce to reattempt the highs once again. But if it starts cracking through that midline, probably going to go to the bottom. Next up, we've got gold in a gigantic wedge and not really a whole lot else going on. The buyers are holding the deep L5. And I mean, really the big thing that stands out here is the market opened up with that big gap. They tried rallying up to the highs, but they could not break above that top and just got obliterated all the way back down. Buyers are still obviously trying to buy the lows, but now we're challenging them and they're not bouncing very well. It's a nice little push and the buyers are coming back, but the big question now is, was this a little too much? Did this shake the confidence of the buyers enough for them to want to be exiting on this next pop? If that's the case, we'll likely see falling resistance come into play. If that's not the case, we'll still probably see falling resistance bounce a little bit, but then we'll break above it and try to challenge these previous highs and really confirm the trend change, get a higher high, higher low. Because, I mean, the big thing, right, we haven't broken a new low, so we haven't continued the downward trend. We're still in a range, kind of, a little bit of a funky wedge coming off the base. Nice and cheap. Buyers know that they have a really high reward versus risk down here, and it's likely that they're going to be at least giving it a shot. Over on crude oil, we have another multi-tiered channel working its way higher. This one's a little bit sloppier, though, because it's fairly obvious to see that something changed right around here. We're not making the highs anymore. They're weakening up a little bit. So the larger channel is here, but it appears more like we had the spike into the channel. And that channel may have gotten just a bit overzealous, or maybe they're trying to create a multi-tiered spiking channel that way. At the moment, they're still holding rising support. They're still holding this midline. The resistance is still there. So I have to give them the benefit of the doubt. But it's certainly not my favorite location. I'm really not a big fan of the fact that it's just grinding this midline here and almost appears desperate for a pullback. With this kind of extensive movement to the upside, this is really good. That's what buyers needed to see to get away from this 52 to 54 area. That's a great breakout. But now usually is the time where you start seeing them take a bit of a break, get that two-legged correction back to support, and then resume the trend back up again. $60 still in the potential line of fire, and if the buyers keep pushing this market higher, there's no reason to expect anything less than potentially even 61, especially if it keeps up this speed. But buyers will be definitely gearing up for a pullback if they can get one. Then we've got the euro, which is pulling back pretty nicely overall to, again, this is another one of those wishy-washy type of setups. This could be a spike in channel, something like this, and the market will have broken underneath the low of. That's the first way to do it, and then we can go from the top and we see a nice descending wedge. Either way, we don't really have a clear structural break of this bearishness. We're still continuing lower highs, lower lows, lower highs, lower lows. Everything is continuing down. It appears as though maybe we've completed a measured move objective or are at the very least pretty close. And we also have the bullish L4, which is coming into play right on the top of previous structure, right around 1.19. Big zone of interest. Obviously, if 1.9 is there, that also means that 1.2, the big Mac Daddy of levels, that's hanging out there as well. So we're going to have to be very cautious around that 1.2. You can see it does host some pretty big moves, and this might be off to the races, and we might not even pull back. The last time we broke through it, it never did. Now that they're finally back and it's ripping back up, that might be the final time before we go rallying all the way back to highs again. We'll have to wait and see, but it is looking like bulls are making a shot. It's still likely that the bears are in control. Right? We can't step aside yet. We haven't had a higher high or any transition, but buyers will be looking to buy on the dip closer towards that 1.19. Next up on the crypto side of things, we've got Bitcoin with an ascending wedge working its way higher, although the ascending wedge is a bit gross in the sense of these highs. These are really big exhaustive highs, and then immediate corrections down. Slowly grinds its way up, and then a big pop through the high, and then grinds its way back down again. These aren't really what you would consider healthy highs. Usually a trend, right? You want to see breakout, pullback, and it's holding the previous highs, and it's continuing. That's your average textbook trend. In this case, though, we're pushing higher low, breaks out really aggressively, deep pullback, kind of looks like an M, little baby swing inside of there, continues up, and now we're pulling back a little bit more. So you can see there is some definitive bullishness here, but one thing that we're missing is consistency in size of pullbacks. It appears as though these pullbacks are relatively equidistant. So if we're looking for some type of measured move back to a previous structural zone, that would be the one to look at. So let's take a look at that, put a line on there, that one fits. So if we put a support zone there, it'd be about 35,000. So that's the big zone of interest that buyers are going to be trying to hold back on. And if we go backward, 35,000 certainly is a big level. We're no stranger to 35K. That level's been an absolute train wreck. It wouldn't be a surprise at all to see the market want to come back there. The one concern, obviously, is the lower high. That's a bit of a problem. It would have been really nice to see a continuation up to a new high and more proof, but the buyers are still giving it a shot. We're still forming higher lows, higher highs in the shorter term. Nothing really saying that they've lost their grip, but it would be a good thing to see them showing back up to the party sooner than later. And then finally, over on Ethereum, it's finally pulling back. Wow, finally, right? Jeez. We do have a bit of divergence off the highs. That would be expected. This is a very strong leg to the upside. And it's taking a bit of profit. It went a lot further than I was expecting it to. I thought we were going to get to like the 1620s. Ended up ramping all the way up towards the 1770s before finally pulling back, depending on your exchange. Now, the pullback that's setting up here, this is setting up to be a fantastic zone of interest, but it depends on how quickly it gets back. The reason I like this area is this is the wedge breakout, and the wedge breakout created this point of interest, kind of the crux, if you will, where they both come together. Typically, when you're looking at a wedge, that crossing point usually almost always ends up being where the POC of the range is. That's where that volume cluster comes in, and if we look at this as a volume profile, go left to right, and we can see where the volume is. Generally, it should land in the middle there once it eventually shows up here. Maybe. Well, let's load. There we go. So we've got the POC. Yeah, basically smack on top of that. Wow, that wasn't even close to a straight line. Right, smack on top of that zone of support. And the thing that makes this so nice is this is a large POC or a wedge cross point. This is also a pullback to rising channel support, and we have a major L2 all stacking in the same spot. And that's why I said it depends on how quickly it gets back, because if this takes a little longer, that would actually be a good thing, because then we're lining everything up together to make a big 1-2 punch. If it gets down there really, really fast, it might have to range out for a little while and maybe even skip off of this for a bit as extra confirmation. So this is one of those times where I know crypto can dip really fast, but it might be more detrimental if it does that. It would be preferable to see it go a little bit slower. It's usually not crypto's motto, though. All right, well, now with that out of the way, we've got all the charts taken care of and we've got all the markets taken care of. Really interesting week ahead of us. Very big lack of news, right? There's almost nothing going on in the news calendar. We've got an extended weekend next week. And, well, crypto's moving really well, but the markets, they just keep hitting these all-time highs and kind of backing off. And these last few days, this last week kind of has been a pretty grindy, slow meh. It's still okay, but it would be preferable to see a bit more volatility stepping back up to the plate. Either way, they got the game plan locked and loaded for the week ahead. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic week of trading, and we will see you all in the next one. Thanks.